Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and also consider other important aspects and topics that you should be aware of if you're working for yourself, self-employed, running a small business. So today we're going to talk about cash accounting for VAT. Before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to find other information that we have on a whole host of topics, all aimed at supporting you in your self-employment. So back then to cash accounting for VAT. So we've had a lot of questions about the various VAT schemes that are in place to help you with your VAT accounting, and we decided to talk about them one at a time, just to keep things simple and straightforward. So today we're going to talk about the cash accounting scheme, specifically for VAT. So in the standard accounting scheme for VAT, what happens is you issue your sales invoice and you receive your purchase invoice, and the date of the invoice determines the VAT period that falls within. So we're driven by the date of the invoice. So with the cash accounting scheme, we're actually driven by the date of payment. So the date you receive your payment from your customer, or the date that you make the payment to your supplier, as opposed to the date of the invoice. So this, of course, can be helpful with your cash flow. So, for example, if you have customers that have lengthy terms or notorious slow payers, you may be in a position with standard accounting for VAT, where you're having to pay the VAT that you've charged on your invoice, sometimes a considerable amount of time before you actually get paid by your actual customer or client. So that would be one example of when the cash accounting scheme would be beneficial for your business. But perhaps if it's the opposite way round and you have good long terms on your supplier payments, then you may find that it would be disadvantageous for you personally. So it's really important to consider how this would impact your individual business and your individual circumstances. So of course, as with everything, in order to be able to accurately assess whether this is the right thing for your business, it's important that you actually take the time to fully understand what will be happening. So as I explained before, with standard accounting, your sales and your purchase invoices, or the point of payment for things like cash expenses, are going to be the tax date. So when you, at the end of the VAT period, when you come to do your VAT return and you are adding up all of the VAT that you've collected on your sales, and you're working out how much you've paid on your purchase invoices in normal VAT accounting, standard VAT accounting, to do that you would be driven by the dates of the invoices. So whether you've paid or been paid is irrelevant in standard accounting. So with cash accounting, the date of the actual invoice no longer becomes relevant, but the actual date that you get paid or you make the payment. Now, there are some circumstances which mean that you won't be eligible for VAT cash accounting. I'm going to pop the link in the description for you so you can actually read that in detail. If you have an annual turnover of 1.6 million, then you would not be eligible. And if you use the flat rate VAT scheme, then you also would not be eligible for this. And as I talked about earlier, there would be some circumstances that it just wouldn't be the right thing for your business. Some of those things would be practical when you actually look at how much VAT you would pay and how your cash flow is impacted by the scheme that you choose. But sometimes it could just be an operational thing. If your records are not kept well up to date and they are disorganized, then cash accounting is more difficult to track. So in order to do it properly, you do need to have your records up to date to make sure that there is that there is no sort of confusion over the two schemes. You can't pick and choose, so you can't sometimes do cash accounting, sometimes do standard accounting. And similarly, if you can't do cash accounting just for your sales and do standard accounting for your purchases, it is all or nothing. You don't need to apply to be able to do it. You can just do this. That's no problem. And the same if you decide that you no longer want to do cash accounting, or if you are no longer eligible, you don't need to notify HMRC whether you are or you aren't doing it. But you must, the same as if you're doing standard VAT accounting, and in fact the same in all business taxes, you must have accurate records to show that you have applied the scheme correctly. Of course, these days, most people for VAT now are mandated to comply with Making Tax Digital, which means that the vast majority of people will be using software. And it is really crucial when you're using the software. For a start, it's important if you're using cash accounting that your software is set up correctly to be able to calculate on that basis for you. But it's also important that you have an understanding of what your software is doing. So, for example, if you're doing standard VAT accounting, where the date is from the invoice date, then the important thing before you run your VAT return is that all of the invoices are entered, because of course, much as it would be preferable that all your bookkeeping is up to date, as long as the invoices are in, then you are going to get the correct VAT return, a correct and accurate VAT return. But of course, for the cash accounting, the payments will need to be entered, and if those payments aren't entered, then the VAT will not be recorded, which will make your return inaccurate. And it's also important that you understand what's happening with where the information is being pulled from for when you run your VAT return. So if you're doing cash accounting, it's going to be from the payment, but of course the payment needs to know what the actual transaction is. So if you are, for example, just allocating a payment in or out directly to the bank feed, that is the point that you tell your software which VAT rate is applicable, so that will be no problem. If you are putting a payment on a customer's account or a supplier's account, then in order for the software to know which VAT rate applies, it needs to be matched to the correct invoice. So it's important to understand that how your software is dealing with these things, and that for example, if you just have payments on account and you haven't matched them up to the invoices, are they still pulling into the VAT return? and there's a good chance that they won't be. So a really useful scheme for some people, can be very helpful with cash flow, which can be crucial in certain industries, to be on the cash accounting. But it's really important that you correctly and fully understand what is the scheme is achieving, and then how that translates in your software to make sure that your returns are fully accurate and correct. Another note on cash accounting is, if you stop doing cash accounting, or if you cease being registered for VAT, again, it's really important that you can understand which VAT has already been accounted for, and to make sure that the transition from the being VAT registered to not being registered, or the transition from cash accounting to standard accounting, ensures that there's no overlap and no gaps in the VAT. So you don't want to miss out huge amounts of, well, you don't want to miss out any of your VAT, but there's the potential for huge amounts to sort of fall down the gap as you transition. Don't assume that your software will be able to fully cope with the transition for you. It's important that you understand exactly what has been accounted for already, and what needs to be accounted for, and before you actually run the first VAT return in the new scheme, if you're transitioning, or before you run your final VAT if you're deregistering. So hopefully this helps you to have an overview of the cash accounting, and just gives you enough information for you to be able to consider this in conjunction with the operations of your own business, and to be able to decide if this scheme is right for you. And as I say, if it is, then there's no need to apply. You can just start to use this. But it is important that it is right, and that if it's not right for you, that you just continue on the standard accounting. And of course, with everything, if you're not sure, then do seek some professional advice on this. And if you are seeking professional advice, ensure that the person you're seeking the advice from is fully qualified to advise you on what you're asking them for, that they're a member of a professional body if applicable, and that they have insurance. So hopefully this has been useful for you. If you have found the information helpful, please do like the video. And as I mentioned earlier, if you could take the time to subscribe to our YouTube channel, that will help you to be able to reference the information at a future date. Thank you very much for watching. Goodbye.